Want to go over the 200K portfolio, want to go over live results since the beginning of the year, where we are in the portfolio, the hypothetical results, and a portfolio adjustment in this video. So let's go over the $100,000 run-up we had in the stock index portfolio to give you some perspective of where we are. These are the daily P&Ls in the 200K portfolio, live results, and we started the beginning of the year in a very challenging trade with spike in volatility. Gold and crude oil markets were very challenging. Soybeans, commodity markets in general were challenging. We had about a 16.5% drawdown, or about $33,000 drawdown through February the 18th on a 200K portfolio. We paused trading, did some research, decided to focus on the stock indexes. We scaled into the stock index portfolio right here on March the 3rd. We made an adjustment on April the 12th for that. And through March the 3rd, through May the 27th, trading about 6 micros, $101,000 run up, about 50%. And since May the 27th, we have had about a $30,000 drawdown, so about $15,000 drawdown in live trading. So lots of ups and downs, up about 19% on the year, or 38K. And so these are the live trading results. And the drawdown here is similar. May 31st to June 10th is about 30K. The drawdown in this time period over a month and a half was 32K. So this drawdown happened much more quickly, and over about half of it was on May the 31st. We had this big run up, trading 6 micros. On the portfolio calculator, you'll see 23K and 20K. And so these are the live results with slippage and commission. And so these 2 days kind of cancel each other out. And since that, we've had about a $16,000 drawdown. So this is where we are in the live trading, up about 19% on the year, and currently in a 15% drawdown from the equity peaks on May 27th. So here is the portfolio calculator. The portfolio calculator is in a 48K drawdown, and it's less than what we are in live because we're trading 60% of this. And so we see this drawdown right here, and let's look at the drawdown curve as well. Big spike down. So I have some adjustments. I'm going to show you what the adjustments are. But we've had extreme chop and volatility. I'm going to go over that in a minute as well. Look at the charts. And I want to take a look here at the daily P&Ls. So when you look at the daily P&Ls, you come down here and you see the portfolio calculator results, 34, 23. The biggest trading day in this portfolio was 34K. The biggest losing day was right here 2 days later, 2 trading days later. May 30th was Memorial Day. And so 10 days here of extreme chop. And so that's where we are in the drawdown. We are right now at the beginning of a month. You see really nice months in this portfolio. We're minus 28K. Let's look at some. Let's look at April and see how it started. April, or let's see, when was it? April or May? That was a tough start. April started out in a drawdown as well. So April through the 12th, April the 12th, minus 15K. So minus a 15K drawdown in the month of April, and April was up 68K. And so big recovery there. And March, let's look at March and see where how March looks. And so March the 1st is right here. And so March 1 through March 8th is minus a 13K drawdown. Then you had a big gain here. And so let's look back at some of these other drawdowns. You had a 14 and a 10K loss here on January 25th and 26th after a huge gain. So you had a huge gain of 20K, 14K, 20K, and then minus 14 and minus 10. So 24K drawdown in 2 days. And so let's keep scrolling back and looking at additional drawdown patterns that we see that we can identify with right now. So those are some. I haven't completely looked at everything, every drawdown pattern. November 5th through November 9th, 19K drawdown. And so that is where we are in this drawdown. I have some adjustments that I want to make in this portfolio calculator, and I want to show you those. And so this is the latest portfolio calculator through June 10th, and what we've been trading since April the 12th. We started the stock index portfolio on March the 3rd. We made one adjustment on April the 12th, adjusting the stop loss of one of the gap continuations, and I'm going to have additional adjustments that I'm going to add to this portfolio calculator. And here is what they are. Notice 36.15, and what we're going to do is we're going to take out this Nasdaq strategy, Cobra 2022 NQ, remove that, and that helps some right there, 41.25. It's still a 43 out of 43 drawdown. It's still at a worst case drawdown with that. What happens when we add our two new strategies? Release two new strategies this week. Volume trend Nasdaq, VST divergence Nasdaq. And so let's go with this right here. Adding these two strategies. And you see $34,000 drawdown out of $38,000. This is the portfolio we want to step into. It is in a drawdown. And we do have a cushion. If we look at, say, our live results from May the 26th forward, we're up $4,500. So May 26th through here, ran it up really strong. May 26th, 27th, and then we had the drawdown. We're up $4,500. Not ideal, but we are up. And so let's look at, we have this cushion right here to go into, and let's look at the drawdown now. So that's trading 6 micros. We're on about a 4K drawdown, and so you got to give it some room to bounce. And so risk about 4K per E-mini or 6K or 7K to give it some room to bounce. This one's down 12K on the month. It has an even larger. See, here's where the drawdown is right now, and you can give this room to bounce. We do have FOMC this week on Wednesday, and we had CPI on Friday. We'll go over some of those news events and market dynamics here in a minute. And so you see that the largest winning day increases to 39K. The largest losing day increases to 22.5. And so you could scale back in contracts as well. We're trading 6 micros per 200K. And this is something to look at. The daily Pnls as well. When you come back and look at these daily Pnls, you had 39 and 26K. So you had a 39 and 26K, that's 66K. That was more than our 58K, and then it's currently in a 34K drawdown. So a little better performance because of the new strategies that work so well in this market environment. If you have the stock index portfolio or the micro stock index portfolio, all strategy access, had to clear my throat there, but if you have the all strategy access stock index portfolio, micro stock index portfolio, you'll be getting this update before Monday's trade for the two new strategies. Here is what this workspace currently looks like. You have the stock index portfolio 25. We'll now have 26 strategies. We're moving, here's the 10 ES strategies. We're removing this strategy right here, Cobra 2022, Cobra NQ 2022, not this one, but this one, and we're adding the VSD divergence and VT NQ. Here are the two strategies right here in the all strategy access workspaces with the VSD dynamic indicators, and you have VT NQ right here. Took a short trade on Thursday. It actually was profitable yesterday, slightly profitable. You can see, we talk about propping up in the market, and you can kind of see that when you have a strategy like this, because the market's going down and it turns out to be a good short. We don't expect all of our trades to go our way. We get stopped out, you know. We anticipate having losing trades as well and being wrong, but you know, just kind of can see how the propping up works. You got a good short trade going, and it just won't go lower, and it just stops at the lows. It spends time here at the lows, it rallies, and it just comes back to the lows, and it's a propped up market. And a lot of times we see follow through to the downside, gap downs after propping up, and we saw that on Thursday and saw that on Friday. And I think the market has lower to go, especially with some of the reports that were released on Friday, and we'll go over those in a minute. But I did want to say that if you have the all strategy access, you've received these two already, and you'll get the stock index portfolio updates, micro stock indexes as well before Monday's trade. So once again, here is the update with 26 strategies instead of 25, including the 2 new strategies. It's down 12K on the month. I want to go over the drawdown cycle in this one as well. Let's look back at April. In April, this had this type of drawdown on April 6th, 7th, 8th. And you come in here and you see a 27K drawdown right there, April 6th through 12th. And we're coming into the middle of the month. We have weekly and monthly patterns that we've noticed. Weekly patterns tend to lose early in the week and then do well at the end. And then we have monthly patterns that we've seen where the market did poorly at the beginning of the month and then did well at the middle of the month. And so that's one of the things we're looking at. We are in the middle of the month now. And in March time frame, March is pretty straight up. So it's some big losing days though. 24K up, 15K down, and so this is the portfolio that we're going to be trading. I want to talk about the market now. So pretty much all of our strategies are day trade. The market is down where it is, down over 20% on the Nasdaq on the year. We're up 19%, even though we've had a 15% drawdown. The market is down on the year. The Nasdaq and S&P, and you can see it's broken out of its range. And yesterday we had the CPI, highest inflation in 40 years, at 8.6%. Michigan consumer sentiment, highest level ever recorded since they started recording Michigan consumer sentiment. And so you saw this sharp sell-off pre-market, and you see the gap down. And so the range-bound trading is what occurred yesterday, and you see this. We continue to see this constant prop-up type market. The gap down, 30 minutes of trade, and then after 30 minutes of trade, it's just you can draw a straight line through the middle, and the rest of the day chops around that. And you continue to see massive liquidity. Here is the Fed's balance sheet. It dropped from May 18th to the 25th, but since the 25th, it's gone up a little bit. I thought June was the month where there's going to be quantitative tightening and the Fed was going to reduce their balance sheet. They haven't started yet. So it may be priced in, but I don't think a lot of it is priced in. And so anticipating further downside in the market. And I do believe the Fed balance sheet is one of the reasons why the market has been propped up so much and run up so much. It's not that I want the market to crash. I'm not necessarily a bear of the U.S. economy or the market. I just want the truth. I don't agree with market manipulation. I don't agree with causing the market to go up based on Fed policy. Believe it should be left alone. That is my personal belief on that. And you can see what the market's done on a monthly chart. It looks like a much bigger, sharper drawdown when you look at it on a monthly time frame. And you have markets like GameStop. 2 years ago, this stock was trading at $4. Its best valuation is probably about $15, and it's up here at $129. And so until meme stocks like GameStop and others come back to value, I don't think we're anywhere close to a market bottom. And I think that one stock does not make the market, but I think this does still represent the overall bubble in the market. I think it's still there, and so be prepared for more chop and more downside in the markets. So one of the things you'll also note in the market is the if it's down a lot, and we'd like to take advantage of big moves up or down, but if it happens all at once, if it's just some big spike or surge trade, it's kind of hard to capture. If it happens during an economic release, happens quickly, there's lots of slippage. You get a gap down, you get one bar down, and then the rest of the hours of the day are in a range, as opposed to a time period like this where there is a multi-bar trend to the upside. There's not really a multi-bar trend to the downside. There is a 2-bar trend here on Thursday and a 1-bar trend here on Friday, and the rest of it's pretty choppy. And so we continue to see markets that go up being smooth and markets go down because of the excess liquidity that seems to prop it up. If the market sells off, let's prop it up a little bit. Let's prop it up a little bit every day that it does sell off. And so that's where the chop comes from. I think the market can loosen up, though, because we haven't seen in this whole entire bear market real solid sell-offs intraday very often, just a few. So it's very, very hard to trade erratic, choppy price action because oftentimes that erratic price action is different each time it's erratic, and so locking into a pattern in a very erratic market, it can be challenging. I still am researching that. More choppy patterns. I have a long list of research that I'm working on and will implement. But this is what I wanted to share with you today. Over the weekend research, the new portfolio update. The way you could approach this is to step in, trade this for a bounce with the new strategies, with the right number of contracts for your portfolio size, and risk that amount. Or you can just wait. You can wait until FOMC comes out on Wednesday. You can wait till Thursday or Friday. The market could trend at any time. I can't predict the microstructure of the market. It's hard to predict whether the market's going to go up or down on any given day, much less the actual microstructure, if it's going to be very choppy or trendy, if the trend's going to happen at night, or if the trend's going to happen during the day. That's extremely difficult to predict the details of the trend, if not the overall trend in general. So you can trade this, you can sit back and wait, or you can wait for additional portfolio adjustments and research in this market. This market could chop some more, and we have tight reins on this, and so we're going to risk a little bit here with this new portfolio starting this week with the same position sizing. If we don't get results quickly, we're going to pause and do more research, and concerned we could see a summer of chop if we don't see a trend soon.
Hey, David Bean here. Welcome to Capstone Trading Systems YouTube page. Be sure to subscribe to join our community of algorithmic traders. We are real money traders. We share our winning streaks, we share our losing streaks, as well as market updates, strategies, and coding tips.